Hello everyone, welcome to Akira's Academy of Accounting and Finance, and the topic today that we are going to discuss about is what is accounting. Now I know you have read this definition 100 times that accounting can be defined as the process of identifying, measuring, recording and communicating the required information relating to the economic events of an organization to the interested users of such information. Okay, but today we are going to elaborate it a little bit. Okay, now when I say this is a process we are going to go through it. Okay, so this whole is a process. This process relates to what? To the economic events of an organization. Now when I say organization, what is an organization? It is a business unit which has carried on certain operation for certain motive. Now that motive could be a profit motive, that could be a non-profit motive, that the charitable institutions, there are certain institutes which there's an orphanage home, there is an old age home. They are also considered as an organization, though it is not for a profit motive. And there are profit motive organizations. Now that could be a single person carrying on a business, a sole proprietor, we say. It could be a partners, two or more partners started to decided to carry out certain venture. So it could be a partnership firm, it could be a company, it could be an association of person, it could be a cooperative society. So all these comes under the purview of an organization. Now this organization, it is carrying out certain events, okay, certain transactions. They are dealing in certain transactions, certain events. Now but those transactions or those events must relate to an organization. Likewise, let's say I started a business and I am, let's say I have a marriage to attend. Now that marriage is an event, right? But does that relate to the business? No. So that will not be recorded in my books. Let's say I am attending a party with my friends. That is also an event. Okay, that may benefit me in certain ways related to my business, but that is an event which does not directly relates to the business. Okay, so that will that be recorded? No, it will not be recorded. So those transactions, those events which relates to an organization, that could be an external event, external, that could be an internal event. External events means the outsiders. I am purchasing the goods from the suppliers. I am selling the goods to the customers. I am paying the rent of for the property which I to my landlord. So these all are external events. And internal events relates to what? I am giving salary or wages to my employees, or there are those goods are from the raw materials are shifting to the stores department and everything, manufacturing department. These are internal events. Okay, so all those external or internal events which relates to an organization, those events, what we have to do, first and foremost, we need to identify it. Okay, there is a transaction that has happened. Okay, now that transaction, first I need to identify, does that transaction relates to the business? Yes. Okay, then the second is processes. We need to measure it. Measure it in terms of money, monetary terms. Is this measurable in terms of money? Likewise, if I say there is an employee who is working in my business, he left the organization. Now that is going to affect the organization, my productivity, efficiency of the organization. He's a very good employee, but he transferred to some other place. Now that productivity, efficiency, I will not get from any other employee. So it is going to affect the organization, but can that be measured in terms of money? No. So that event which cannot be measured in terms of money will not be recorded. Likewise, for example, in my organization, there are two people who entered into a tip. Okay, they entered into a certain argument and discussions, and something happened with them. They are not responding. There is a there's something with went between them, and they are not giving the proper reports to each other. So this is going to affect. Okay, this is not like it's not going to affect the organization, but will that be recorded? No. So those transactions, those events which can be measured in terms of money, okay, it in terms of money, those transactions, what we have to do, we have to record them. Okay, recording is an altogether a process which we have to take into consideration. Let's say it's been 10 years to my marriage. I still remember when I had a fight with my husband, when we entered into a discussion on this particular date, on this particular year, on this particular month. Like I remember, but my husband has a short-term memory loss. Okay, he don't remember. He don't have an idea what happened on that particular day. So if I, the thing is, I can manipulate also, right? If I can say no, you said this thing. I know he don't know it, but if he record it, it becomes easy for him. No, this is not the thing that happened on that particular day. So in the business, numerous transactions are happening. That was just on a fun note. So in the business, numerous transactions are happening. We cannot just keep the things in our mind that this transaction happened on this particular day. Every day, numerous transactions are happening. We are purchasing, we are selling, we are dealing with certain parties, we are paying rent, we are giving the electricity bill, we are paying salaries, all these, we are purchasing a property. These all are the economic events that are happening, which are measured in terms of money. That transaction, we need to record them, we need to classify them, we need to summarize them, and then we need to communicate them. Communication, that is why accounting is considered as the language of business, because what the accounting is doing, it is communicating in the form of reports. Okay, they have to present a financial statements, balance sheet, profit and loss account. From that, the interested users will get to know how the business is running. So there is a process called communication of such information, so that the users, now those users could be external users, could be internal users. Now, when I say internal users, who are the internal users? I am running a business. I am an internal user. There are CEOs, there are managers who have to take a decision, like whether the business is running smoothly, what other strategies we have to follow, what is the profit, how much profit we can, increases. Is there another project we can go on with another project? So these all strategic decisions are being taken by the internal users, and those internal users need all such information. Similarly, there are external users. Who are the external users? The customers, okay, the investors, the creditors. I am like, there are shareholders, there are certain people who are investing in the business, who are investing in certain companies. They want to know whether this business is going to run in profit, or is it going to incur loss. If it is going to run and going to book profit, I am going to invest in this particular business. But if it is running into losses, who the hell will put their money, the hard earned money, in that business? So they need to look into the books of accounts. Likewise, there are creditors who are selling the goods to the business organization on credit. But what if that business organization is not able to pay off their money? So the creditors want to look how the creditors will get to know whether the organization is going to give them the money from their books. Okay, then there are, the suppliers, then there are the customers who wants to know, like, this organization, whether it is providing me the after sale service, what warranty, what guarantee. Like, if the business is running smoothly, then all these things, all these benefits are the customers are going to get from it. Then there is a government who needs to know that this organization will be paying the taxes on time, regularly, properly. So these are the external people, the external users who needs all these information. Okay, so when I say accounting, it is a process. On the basis of this information, they will again take decision. This people, the external users, the internal users, they are going to take decision Again, on basis of that decision, certain transaction, certain event will happen. Again, those transaction and events will be identified, it will be measured, it will be recorded, it will be communicated. Okay, I hope I am able to deliver the accounting definition in the proper way. Let's see you with the next topic. Bye bye.